Check. Can you guys hear me? Hello? What's up, Darian? Can you hear me? Okay, cool. I'm gonna just give it a couple minutes. I just let everyone in the lab know. How's the mic quality? Is it good? Disable. Who's the person behind me? You're funny. You're funny. Darian, at any point, just let me know if it's lagging or anything. And if anyone has any questions, feel free to stop me. What's up, love? Is anyone else having issues with their X account? Like not showing notifications? Is my volume too low? Okay, there we go. What's up, Westwood? How we doing? I mean, I guess we could just get started, right? Yeah, it's dead. Yeah, I've been having issues with it. It's dead. A bit. Okay. Well, no, let's just get into it. I'm just gonna do it. I was gonna give some time for people to join, but it's fine. If you guys have any questions, like, feel free to stop me at any point. We'll just kind of get through this. What's up, Candace? Candace, isn't it late? Won't even load comments for me. Yeah. Not, it's the same, and even when it does, it's like, it's comments that are just bots. It sucks. Okay, anyways. What was I gonna do? There we go. Get rid of that. So we're gonna be backtesting on TradeZella today. Yeah, we're gonna be backtesting like TradeZella today. We're gonna be doing a couple of things. I will obviously ask. This is something that we do in the lab. I tend to just ask for people's opinions on a trade if desired. They give me the input, but today mostly we're just going to be backtesting the TLM model, to be honest with you. We're going to be backtesting the TLM model. We're going to be backtesting some swings, some swing formations, trying to figure out, just trying to collect more and more data. So that's where we are. So it's mainly just going to be the 2 a.m., 6 a.m., 10 a.m., 4-hour candles that we're going to be using. And then we'll just go from there. So feel free to stop me. I'm watching chat. If you guys have any questions, let me know. Okay, so currently it's 12:21, so I'm going to go ahead and skip over to 9 a.m. in the morning. Or 9 a.m. What's up, Trader Mid? I'm going to go ahead and skip over to 9 a.m. Okay. So on the, let me see if I can kind of minimize this a little bit. Whoops, no, I guess not. There we go. So on the right hand side, we have the 4-hour chart. On the left hand side, we have the 50-minute chart. Because I already did so much NQ trader made, to be honest with you. Like, I already backtested NQ so many times. Okay. So here we have a couple things that I might like. Here we have a sweep of this low. So okay, first and foremost, if we're trading TLM, we're gonna want to be using our premium and our discount, right? Just gonna take a moment here to kind of analyze this daily. We've got this low, got that high. I don't know why it's no longer, there we go. I was using the wrong drawing tool. We've got this low, we've got that high. This is our established range, right? So in an ideal scenario, I'd want to be longing out of here on a daily. So get a sweep of this low here at 4142.5, maybe continue higher, but we shall see. And again, I don't have NQ data, so I might not be able to compare SMTs, and that's kind of fine. It is a big obviously confirmation, but we're just going to be trading NQ or raw price action by itself. So we have this low, we have this high. This is the established range. This candle right here was the candle that led us into the highs. So as you can see, price came back down. We took out this April low right here, the 6th of April. Then we got displacement beyond this candle, and then we continued to respect this candle. So this is the candle that led us to the impulse higher. That is the beginning of the move. This is the end of the current move. So this is our local, or not our local, this is our daily range. Now, in a trending environment, obviously we'd want to see premium to discount, then premium to discount, then premium to discount. So what I'm gonna kind of be looking for is I'm either gonna be looking for any sort of swing formation near the lows that could help me identify a potential continuation in the trend, and then we'll just kind of move from there. So we are going to be using a couple of tools. We're obviously going to be using a 4-hour swing formation. We're going to be using deviations, so projections. So for those of you that don't know, so we've got that high to that low. That is the swing. So last candle, impulse higher. This right here is the low. That right there is the high. That's where I want to anchor my deviations. We've got a projection of -4, and we have an internal level right here, which I do really like. We got a really, really nice reaction out of there. So what I would want to see is either an impulse higher from here. Either an impulse higher from here and a confirmation of this swing into some sort of internal liquidity point. So what's up, Nick? Full ported. Fuck yeah. So it's currently 9 in the morning. So we ideally want to go from discount to premium. So I am going to plot the high and the low of this current range here. That's the established range. And so if I want to see lower, then obviously I'd want to see a distribution above this premium price point, which means that we'll likely be using, or not likely, but what's up, Alejandro? Which means that I would ideally want to be using a premium array for then displacement lower. But for the meantime, we had this pretty strong reaction here on this 4-hour chart. We had this large candle be formed. Then Wednesday at around 6 p.m. open, swept that low, which I'm a huge fan. I'm a huge fan of lows that are coordinated with order blocks, right? And then we have kind of another formation of a swing here. So as you can see, this would be candle number 1. This would kind of be our rejection block as it failed to close lower. We've got a swing formation here. And so now what I would kind of use as confirmation is ideally is I want to ask myself is there a candle that significantly swept that low, and my eyes immediately try to go to these right here. But anyways, we're trading the lab model. So we've got the deviation. Again, I didn't load the SMT data. That's fine. We've got the deviation. We've got a bit of a swing here. Not to focus too much on order blocks. We've got the creation of this inverse here. So now I would say you get your close above, you limit order with a stop below this low, I would say. And then I would target the first obvious high. I would either target premium, so it would be either 4217 or 4220 flat, as it is just that's equilibrium of the range. And so we're trading lows to equilibrium, right? Like we want those, not short-term moves, but what I'm going to do is I'm going to kind of just jump back here a little bit. I know it's kind of cheating the system a little bit, but ideally you'd have a limit order here, you'd have a stop below that low, and then you would target either the first high in a premium market, or equilibrium of the range. So I'm going to go ahead and put the limit order in. I do like this setup. Again, really like the setup. Swing formation right there. Close above that 15-minute inverse fair value gap. And so we'll just try and see if we can get an impulse higher. Any questions from anybody? Does this make sense? Is this like logical? The rules that we're using are, we just want to see a sweep of a low, a swing formation on the 4-hour, a 15 to 5-minute confirmation, and then deviations to kind of assist with that. And all we're doing is we're trading from a higher time frame discount to a lower time frame premium, or from a higher time frame premium into a lower time frame discount. So in this case, yeah, I would have my limit order here. I'm just going to do limit, so hopefully it shows up. Advanced, number of contracts. Nope, right there. Okay, so obviously we'll get tagged in. I skipped back like 2 minutes, so just jump forward a little bit. See if we get tagged in. Okay, there we go. So we just got tagged in. It's currently 8:30 in the morning, so I'm just going to let price, I'm just going to skip ahead a little bit faster. And so now what I would want to see is a bullish close above that high, and then that'll allow me to go kind of break it. Okay, well, sure. Okay, so now I'm break even. This was actually a really nice reaction. I didn't expect, not that I didn't expect, I knew it was like 9:30, it was equities open, but I honestly thought it was going to be a little bit more lethargic. I think it's just because of recently, huh? Anyways, so yeah, now I'm just break even. Hopefully it gets up there. Okay, no, target hit. Perfect. Okay. Shit. I'll take it. This is the smoothest start of a live stream, of a backtest live stream I've had in a while. Recently it's been it's been to the point where it's like, oh god, like the start's always like a little rough, and then we kind of have to like find a groove. With that reaction, you go all the way up to those equals. No, as we're specifically trading this model, we're only looking to close at the nearest high or low by equilibrium of the range. And so I kind of just want to stick to those rules. Like I don't want to like, in a scenario where it's like, okay, you've got a swing on your side, and you want to obviously trail this, that's okay. Like that's completely super for trailing. But I kind of want to just follow the rules of what we're doing right now and just kind of stick to that. as we are trying to be as unbiased and collect as much data as possible for a specific thing, right? Like when you're backtesting and you're collecting data, you don't want to. What time frames are these? Sorry, I can't see them on the screen. Oh, damn. Sorry. Is that better? I think that might have been a little bit better. I apologize. Hold on. Hold on. Settings. Stream. Sorry guys, I apologize. Am I still cutting out, or has that improved a little bit? All gravy. Your video blocks the one on the left, 15 minute and 4 hour. Yes, yeah, sorry. Yeah, left is 15 minute, right is 4 hour. These are just the combinations that I'm going for. Yeah, for some reason, like this, the bit rate is like having issues. I'm not entirely sure. Okay, it should be good now. Alex, question. So you're trading back into equilibrium of the swing high to the swing low of that move. Yeah. Like all you're essentially doing is, like, let's say this is kind of like the very bare bones. So all you're essentially doing is, if obviously we're in an uptrend, then you measure that low to that high, and then you get equilibrium, right? Which is your current range. This is like your high time frame range. You're essentially capturing the swing low here, created here, and trading it back into equilibrium of from this high to this low. So it's from a higher time frame discount into a lower time frame premium. Does that make sense? So yeah. No, this was actually really clean. So we'll move forward. So yeah, so this was the anchor here, -4, which aligns perfectly. We've got our inverse confirmation, and we have a swing formation here. So I really liked it. It was a good trade. I wish all of them were like this. Okay, cool. So I'm just going to go ahead and move forward. I'm going to move forward to the next day. I don't want to expose myself a little bit more here, so I'm just going to move to 905. And, okay. Oh, wow. Okay. All right, so this is a bit of a tough spot. Yep, can you show it on the screen currently? What do you mean? Show what? Okay, so here, this is what I was outlining. So this might be interesting. We have an internal price point here on this discount of this leg. Internal price point there. I'm going to roughly just kind of outline that. So now we have another kind of, I wouldn't really consider this a clean swing, but a swing nonetheless, right? Like you have a candle, you have a lower high, a lower low, a higher low, sorry. So in this case, we actually got a really strong, Wednesday hit 50% of the daily range. So, oh, it's currently Sunday too. Okay, this is interesting. It's an interesting spot. We've got a really strong reaction from a discounted price point of the range that we outlined on the daily, right? we've got a massive reaction here on this 2 a.m. candle, which means that London session gave us a really, really nice impulse higher. Really, really nice impulse higher. And so now, yeah, I mean, the idea is that we're still kind of bullish, right? We're still bullish. I would still target this internal at a premium. The thing is, I don't think I'd be able to find myself in a nice positioning. I don't think I'd be able to find myself in a nice, unless we obviously get back down into this established range, premium, or discount, sorry. So this is your low, this is your high, right? This is the high that led us into the low. So this is a significant high. We have a sweep of this high here technically, right? So this is our lower time frame local range. And so now if I would want to see higher prices, I would want to see the current 4-hour candle make a low within here and then a continuation higher. So if we do get that, I would definitely consider maybe something around these price points, but as it stands, I don't like the idea of blindly longing here into a premium market, as I can't really position myself and my risk would be bigger than intended. So I'm just gonna let the tape play. I'm gonna see if maybe this current 4-hour candle or the next 4-hour candle wants to give us a discounted price point. And then if not, then I think this might just go without us. Yeah. Okay. We do have equal highs above too, which I do like. Sorry, there's a lot of drawings going on, so let me just get rid of some of these. Yeah, so unfortunately, no visit to discount. That's the low, that's the high. Consolidation near equilibrium. Yeah, I think this is just a, what did you want me to outline, Trader Mate? What did you want me to outline? Like the deviations, it would be from this low to that high. So 2 to 2.5, either a retracement here into some sort of internal and then continuation, and then 4 is the ultimate target, which is actually aligns perfectly with the external high. So this high here that we initially longed from down here, that move, Alex, your cam is covering the time frame. Yes, yeah, 15 minute. This is 15 minute. That is the 15-minute chart. There. Okay, so I think this day is just going on without us. I think we'll just continue on about our day. It's already like 11:35, so I'm just gonna let this do its thing, and I'm gonna move on to the next day. Unfortunately, we missed out on those longs, but that's okay. So next up. So you've got your bit of an overpass here on the 2 to 2.5, but there you have your established premium and your discount. Yeah, would you short -2 to 2.5 back into discount? In this particular instance, not sure, not entirely. Just because of the fact that this uptrend has been so strong, right? We tapped back into a discount of this daily range, and we've seen such a strong reaction from here. So obviously, if I do get some sort of 4-hour swing confirmation, there could be something there, right? But it would be towards like a really, really shallow internal price point. Because the thing is, if you're counter trending, you want to target the first immediate imbalance, and that's kind of what we've already done here, right? Like we targeted this imbalance here. So now it's like I could potentially look to target a discount, but I don't want to go against the daily. Hey Alex, I've been struggling with my standard deviations. I understand that you draw them on the manipulation legs. What if there isn't a clear manipulation? Would you use instead a sweep? That's a really good question, and that was the scenario here. Where is it? Man, there was a really good example that I missed, and it was specifically for that. So when there isn't a really clean manipulation leg, I like to ask myself, what was the last candle? So for example here, like there isn't a clean manipulation leg here, right? Like you'd obviously be using, or you would be attempting to use that high, this high here, and this low. What I like to do is I ask myself, what was the last candle that made a significant puncture in price? And it was this candle right here. So then I just tend to anchor it from that low to that high on that singular candle. And as you can kind of see, yeah, -4 just roughly aligned with the high, and then displacement lower. Okay, moving on. So yeah, if I'm going against the trend, what's up, Keiko? If I'm going against the trend, I would ideally want to target the first internal price point, and in this particular case, like we've already done that, so my short target has already been hit, so I wouldn't really be comfortable with the idea of continuation, seeing a short here. What I would want to see is, so we're using now this premium and that discount. So this is the low that's currently in place. This is the high that's currently in place. This is our local premium and discount. So in an ideal world, if we come back down into a discount, I see a swing formation around here, continuation higher. That is chef's kiss. Do you always put stop loss below the swing low, not the low of the IFUG? Yeah, you'd want to be using the swing low. I mean, I typically always use the swing lows. I think it really just varies on the person, but I always use the swing lows. But yeah, Alejandro, use the obvious candle that created the puncture, and I think you'll have a little bit more success with that. So yeah. Okay. What would that be, an implied dealing range? My camera's on. Would that be an implied dealing range? Yeah, it would. It would be. Because so here's the thing, right? Like, and this is kind of some of the logic. When you have an established range like this, right? You're using this high and this low. So when this move right here is still in place, this isn't a developed range. So you don't want to use, in some instances, you'll find that price can come back up and not necessarily come back down into a premium or a discount of this leg here or this price leg here. So it'll come back down into equilibrium of the range from that high to this low. How do we know, what's the question? How do we know projection will go to -4 max expansion? You don't know, right? Like, we don't know for certain. It's never a 100% obvious certainty, but there are confirmations, right? So in my scenario, or kind of the tool that I use, is obviously I like to use closes. Closure is one of my favorite things in price. I look for closure for my order blocks. I look for closure on above obviously the imbalances, which is something that we all use. And so if there's a clear, for example here, I have my anchor from that high to that low, my 2 to 2.5, and as you can see, price is showing somewhat of a willingness to close above the beyond that price point. So I use the same similar kind of idea. It's like I'm using closure for above my 2 to 2.5. And obviously you'd want to see a continuation in order flow, right? So at this particular point in time, I want to see a retracement, right? Like we're at this point where we have a sweep of this high. We've now come back down. So this is our external to internal idea, right? We had a sweep of that high. We had an external price point here at this, I think it was like 10 a.m., right? Or 10 p.m., sorry, 4-hour candle. Price came back down. It hit this internal price leg here. And so now, ideally, right, I want to see a continuation lower into this discounted price point so then I can look for higher. But in the case or the scenario where this starts pushing and making somewhat of a swing, then this might be an area of interest for higher. Especially because we've had such a quick reaction out of discount from this higher time frame leg. So I'm always looking for closures. Okay, so I'm going to go ahead and just move forward. I've been doing a lot of talking. Let's get into some of this price action. See if there's anything that we can uncover. Okay, so there's equities open. Strong reaction there. See if we get a close below. I would love to see somewhat of a discounted price point. That would be ideal. Okay. This is the previous 4-hour candle. Did we get a sweep of that? No, but we did get a sweep of that low there. Okay. So now kind of I'm thinking to myself, okay, I can drop down to a lower time frame. There's not a lot of things that align here, right? Like I can obviously cherry pick my deviations, right? In this particular instance, but I guess the most obvious low into the high would either be that one there or this one here. You showed an example of price pushing back into premium move. You said sometimes price may not want to come back into a discount of its current leg, but will tap into discount of the original move. Yeah. So like for example, in this case, like for example here, take this. This is honestly a really good example. Take this price leg here. Would you still be looking to take along, or only if it comes back into a discount of the current leg? I would still be comfortable with taking along out of the. So look, in this instance right here, that high, that low, I know that price didn't come back down into a discount of that price leg. But if I use the developed price leg from that high to this low, we can obviously see that price came back above, retraced into discount right about here, and then saw a continuation higher. So yeah, I would still be comfortable, but I would obviously still need confirmation. Okay, so in this case, we have an internal price point. We don't have much of an obvious swing, right? But we have a sweep of that previous 4-hour candle. So sweep of previous 4-hour candle. Any obvious imbalances here that I'm seeing? Not really. We are at 2 to 2.5, but there are no obvious internal price points that I would kind of be observing at this time. I'd have to like really drop down, and I'm not a big fan of that. So just a bit of a consolidation move here. Not much for me, which is fine. We just discounted the original move. Yeah. How do we know projection? Any other questions, anybody, before I move on? The one imbalance that I would kind of be paying attention to would be this one here. And even then, like, I am super zoomed in, so this would be the one imbalance that I pay attention to. And I don't think the risk to reward would even be remotely worth it at this point in time, because you'd be looking at longing limit, so you'd be looking for a close above that, and that's kind of what you'd be looking at. It'd just be like a 1-to-1, really. So I don't think the risk is worth it. This can definitely still see maybe a continuation higher. Again, ideally, like, I want to see a discount, but if we are in this environment where this becomes efficiently delivered, you've got both. You can almost see like the symmetrical perfection of this price action here. So it's like lower, higher. You've got sell side delivered, buy side delivered, and so now this price may want to just like get out of here as quickly as possible. That's always the case. Price is always just going to navigate through, and it's either looking to make an efficient price leg. It's either looking to make an efficient price leg, or it's looking to create an imbalance away from an efficient price leg. So in this case, this to me is efficient. We've got both ends delivered, and there's a clear story in NQ at that time. And price is just seeking, like, it might want to just get out of here. Stream is still good, by the way, guys. Like, is stream quality still good? So yeah, I'm tempted to just take it as like I want to, but I don't know if it necessarily follows our criteria. I mean, we have an internal, we have an inverse. We have an internal, we have an inverse. We have 2 to 2.5 from that high to that low, right? 2 to 2.5 there. Sweep of previous 4-hour high. I mean, 4-hour low. I mean, yeah. I mean, if we get a close above that imbalance, I might look to just leave the drawing on and see. Whoops. Wait. What? Okay. So we'll let this play out. I'm going to leave the drawing on. I'm not actually going to put the trade on. But I'm going to leave the drawing on and see if maybe okay. No, nice reaction. Might go for that external now. 4226.5. That's kind of what I'm seeing. And nice. But yeah, realistically, like, I'll be honest with you guys, like, I obviously, like, this is a trade that I wouldn't have taken. This is why I didn't put the order on. So, like, I left the drawing on for study purposes, but yeah. Dun, 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 dun. Okay. Yeah, this was nice, though. This was nice. You've had your 2 to 2.5. You've got previous 4-hour sweep. Internal price point. Just an expansion higher. But yeah, realistically, I don't think I would have put on risk on this trade. It's too much of a risk here. Like 9.75 points on ES. Like, I'm not risking that, realistically. So, any questions so far? You guys fuck with the hat? How are we feeling about the hat? Yeah, man. Dude, like, X is just filled with bots at this point in time. No questions? Should I just keep moving forward then? Is that how we're feeling? Keep moving forward. Okay. It's a beautiful day out. I was gonna open my window. Yeah, it has been a good session, right, Darian? Last session wasn't this smooth. I need to send you a teammate hoodie and send me a lab hoodie. I got you. Hat is cool. Thanks, David. Thanks, David Thomas. Thanks, David Thomas. Okay. Is it the V shape? I have journaled about this a lot, and it seems like I never come back to the 50%. Yeah. Yeah, it's just because it's like you've got delivery of both ends, right? So sell side, buy side delivered, V shape. Price wants to escape there as quickly as possible. I'm going to move forward into next day. Just kind of get into 9 in the morning. Around there. Oh, wow. Okay. We had a really, really large expansion out of that low. Just kind of seeing some internal price points here. But yeah, I'm not a huge fan of longing at these, like within these areas. I do still think obviously our higher time frame draw remains this high, which is fine. But yeah, for the most part, like I can't really justify taking a trade up here unless, yeah, I don't know. Right now, like it's kind of not that it's no man's land, but right now it's like I don't want to short this. This is obviously still remaining strong to the upside, but I don't really want to long this because at any point in time this can choose to either we'd have to use context, right? We'd have to use context. So in this particular case, like if I'm looking for higher, then I would need to see a close above this candle's low, right? So I like that you're not using SMT, yeah. So in this particular case, like if I want to see higher, right, I would need to, for the current candle, which is the 6 a.m. candle, to close above the low or within the body of the previous candle. So that this current candle needs to close within that green area. Like that is a must for me to see a continuation. And then I would need, is your focus the 10 a.m. and the 2 p.m. opens? Yeah, so 6 and 10. Right? And then the next candle would have to come in and respect this low. So this is the candle, like in an ideal scenario, again, similar situation, like it has to respect it. As soon as this low is taken, it has to respect that low. So next candle would have to come in, make an open low. I'd have to see a reaction. Buying at a discount on smaller time frames would be high probability. What do you mean? Buying and discount on smaller time frames wouldn't be. I mean, no, certainly you can still obviously achieve that. Even then, like we didn't get to a discount of that current price, like. So yeah, in this case, if I want to see a swing here, yeah, true. 30-second lab model. Again, anchor that high to the manipulation low. So we do have, again, a 2 to 2.5. This is like a similar setup to the previous one. 2 to 2.5 here. Sweep of previous candle. I need to see closure beyond there. So I'm going to go ahead and skip forward. I'm going to let equities open do its thing. And then maybe it'll give us a bit more information. So there's equities open. Yeah, we are a little bit higher into a premium, which is something I'm not super comfortable with. But if anything, I'll just reduce my risk. Okay, so here we have the next candle open, right? Here we have the next candle open. We still have that high. I'm looking at the failure swings for targets. I'll make that a different. So now I would want to see, Darian, what would I want to see this next candle do? I think you know. If this candle closed within this candle's body and made an open to low, right? What do I want this candle to do now? Yes, sir. And make it open to a low. Yes, Nick. Yeah, perfect. So now I'd have to see open, low, high, close, right? So we have the open. Wherever this is, I can't even see the open. We have the opening price. We have a low. Now I see, I want to see the low be created within the wick of the previous candle. So again, respect that 50%. Okay, so we just had this internal price point hit. So now I'm using the lower time frame context. I'm using the lower time frame structure to build a narrative here. And I do obviously want it to respect 50% of the wick there. So just swept that low. There's 50% of that wick. And now let's see if this might want to seek higher from here. Let's see. Or what it wants to do. Our low still remains intact, so that's okay. The idea still kind of remains as long as that low remains. Bit of tricky price action for sure. That's 2 p.m. I think. Yeah, that's 2 p.m. Let's see what 2 p.m. decides to do. And it looks like we are just completely ranging today. So, yeah, not a lot going on here. Okay. Oh, snap. Okay. We swept this low. Swept that low. Still respecting, no closure below, and that's the end of the day. So nothing happened today. No moves on our end. Just leave that as is. All right. Unfortunately, boys, I do have to call it a little bit early. We're in here 15 minutes already. 50, sorry. So I know I'm sorry. I apologize for some of the lag. But I know. But listen, I appreciate all of you guys. Took 2 trades, I think, today. Or just, yeah, 2. Price was just overall trending after that low was made. But I appreciate all of you guys. I do have to call it a little bit early. But hopefully we'll do another one of these soon. Alright, boys. I will see y'all later. See you, Darian.